This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:48 p.m. on March 4th, 2020. This is a strategic midweek webinar like we always do, Wednesday. Session will be recorded, uploaded to YouTube, Clueless Trading YouTube channel for viewing by all other members, any free trial members, paid members, as well as anyone out there with the internet connection. So certainly pass the word around so they can subscribe to the channel for free. And anytime that I post any one of these strategic video casts, samples of certain advanced coaching sessions or any other important videos, market-related videos, then you guys get notified right away. So definitely get all your friends to subscribe to it and have them take a peek into what is the real facts, not the fiction behind what we do here as tactical traders. No emotions. Try to keep that aside. On that note, let us begin. Full disclosure, this is purely for financial education, not for any solicitation or advice. And we shall begin. Try to keep it as short as possible. There's a lot of stuff to cover, but I'm pretty exhausted, and I'm sure all of you guys are, guys and gals. And so let's move on. So this is a newsletter from StockTwits. Smart guys, okay? But this sums it up, and this is what I keep on talking about all the time, that when people are price chasing emotional traders with their own dogmatic beliefs of this should happen, that should happen, the Fed shouldn't do this, Trump shouldn't do that, blah, 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 this type of headline appears. This is the newsletter, comes out for free from StockTwits, and the markets rallied today, and we have no idea why. They're not bullshitting. They're speaking the truth. They had no idea. We did, based on a probability outcome, because trading is just a game of chance, except that tactical trading is a game of probabilities, or what we call quantifiable risk. We know what the risk is. We know what the downside is. We know where the markets are going to bounce from. And despite huge black swan events, those are unquantifiable events that we have gone through over the past 2 weeks. Massive, Corona, for example, just appeared from nowhere, the coronavirus. Despite all that, we're guiding all our members and all our traders to a degree which is astounding. Astounding. Every level that I've shown on my charts, and we're going to quickly update the charts that we looked at from Sunday. And that's why I told everybody to take a good look at the real-time feed. If you're busy during the day, then do it in the evening. Otherwise, you're going to be completely ignorant about what kind of amazing content that we're delivering. And at the same time, you'll be completely ignorant about what the market is doing and why it's doing it. So please, just for yourself, do it. Otherwise, this market's going to absolutely decimate you. You're done. Okay? This market is not a random market. It's a market controlled almost 100% by algorithmic high-frequency trading black box robotic computers that are moving in nanoseconds. Look up nanoseconds. What's nanosecond? 1,000th of a second or more, or 1/10,000th of a second. I don't have the exact decimal numbers in my head. They are so fast, but they move between predetermined levels, and those levels are all posted before it happens, not after it happens. So I'm not looking for accolades. Hey, you're a great guy, amazing. I know what I do is pretty amazing. And basically, sorry, some texts are coming from other members. So you guys have to be somewhat in tune with it. I know for a lot of new members or from old members, it takes a little bit of time, and that's fine. That's fine as long as you're trying. You're gonna get it. You think I know the market like every 15 seconds? What's going to happen every 15 minutes? No, but I know the range that the market is going to trade in, because these are predetermined mathematical numbers that have already been programmed by humans into these algorithmic high frequency trading artificial intelligence machines. In other words, they pick up and they self-learn. That's AI. So when they self-learn, they said, okay, this is going to happen, this event, bomb, so this is how much we're going to fall, this is how much we're going to rise. So when you sit around thinking, oh, something's going up and it's going to keep on going up, and boom, you're done. oh, something's going to fall, it's going to keep on falling, it's all over, you're done. And the case in point was as recently as the last 24 hours. Markets were down 782 points or something crazy like that at the close. My technical signals, I kept on, and again, there's a level of luck involved, of course. Luck is the art of preparation. In my case, art of technical preparation. So when I showed, and because these people are not pushing themselves to be technically orientated, they have no idea why the markets rallied. That is the difference between my service, Clueless A Trading, and the rest of the trading services out there, who are basically price chasers. Price up, they chase. Price down, they sell. And 9 out of 10 times, or maybe more, 8 out of 10 times, I don't know, they're wrong. Because the biggest money is made in some sort of predictive plan that actually works out. And this is not the first time we've done this. And when you look at the ultimate trades today, which are these, okay? The ultimate trades, told you to buy. And mentioned to you guys last night at, even yesterday at 1:09 p.m. I mean, sorry, 1:09 in the afternoon, yesterday afternoon, not this afternoon, okay? March 3rd. And they were selling those stocks hard. So the options were cheap. The call options were damn cheap. They were $1, $2, $3, $4. And they were up how much? I didn't even know where I was selling because it was so high. I could just blindly hit sell and I'd get the highest price because the shorts got completely J-damned, bombed. Okay? And that's why I like to remind people sometimes, not because I'm sitting here saying, oh yeah, you know, so that you guys can learn. You can make one mistake, two mistakes. You could be sitting there, shit scared, you know, doing nothing. And that's pretty much what happens with most traders. Okay, fine. There's always the next day that you can make change in your life, in your trading, and make a positive, large impact on your trading dollars, whether it be small or large. Large can get larger. Small can get large. Like we like to say, small gets big. A $1 call that you sell at 10, all of a sudden your confidence level goes through the roof. And you're actually focusing more on the chart. You're like, okay, let's see what I can do. You can, even in a small account, you can shift your money around. If you're sitting on something for 3 weeks and it's really not doing anything, and it's going to do something because most of my trade alerts, swing trade alerts, work out. Some of them take longer than what I would like. So shift that money. If you sit around saying, oh man, I didn't have any spare money and I couldn't do anything, well, who's to blame? You. That's your money in your account, so you can shift it. So there are no excuses, none. And yesterday I put in a tough boot camp type of statement, RET, retail emotional traders who sit on soiled diapers tend to lose money. Right in the thick of when the market was selling off like crazy. So the ones sat on their diapers, dirty diapers, absolutely terrified, don't have even money to buy some clean diapers today, even though the markets were up how much? Almost 1,200 Dow points, which I said would most probably happen one of these days. And this is not the first day this happened. So it's time to make a change in your life, change in your trading. And if you're listening to this, you obviously are making a mental attempt to change. Well, change faster, learn faster, move faster. Otherwise, there's no way around it. Okay. So saying all that, it's a monumental day, one for the history books, right? Just the way one for the history books last week, like one for the ultimate history books, we went down how much? 3,500 points in 7 days, almost 4,000 points, huge volatility, and we're going to get volatility again tomorrow. Futures are down 22. Technically, nothing's changed, and I'll show you that. But if certain levels break, it's going to be another 700-point down day. So if you took some nice profits, left a little bit in there, scaled in here, scaled in there, and that's the part of money management which I can't teach you. Even I can explain to you the techniques, but you have to keep on practicing that so that you don't get completely blown out day to day. Because 9 out of 10 times what you're selling is up a lot the next day. And what you're not selling because the profits are up are the ones that's going to be down. before they turn up again, if they are real stocks with real charts or charts that are biased to the upside. But this volatility, you don't have to love it. You don't have to hate it. You just have to accept it. This is the new normal. I've been saying it for years now. Okay. So saying all that, let's take a quick rundown through the charts. This is, we'll cover this in a second. I'll leave questions for later on, and we would certainly like to keep this. And I'm very exhausted. It's a lot of work trying to help people make money, believe me. And in the morning when I'm delayed, there's a delayed open on my side with the alerts and stuff because I'm handling my own accounts. And I need I need all my eyes and brains selling this year because they're so fast moving. So I gotta, it's probably going to be like that going forward. So you guys need to know what to do. Okay. Saying all that, all new members, a very important reminder that includes Luis and stuff. All new members go through multiple instructional videos. Very, very critical. On the new member introductory video playlist on YouTube. There are fantastic learning videos about charts, about work. I'm working, some of them are samples of me working directly with new members, introductory videos explaining how you should use my service. So get up to par, man, okay? Because nobody can teach you this stuff to the level you can teach yourself. All right. Let's move on to the charts. So this is one of the, let me see which one is the most easier on the eye. Hold on. Okay, so let's actually start off with this one, okay, the simple one. So this is a static chart. It is not showing what's happening after hours. This is the SPY. And remember, the E-minis are the ES15, these ones. And these basic things you guys need to teach yourself. I can't teach you how to count numbers. I can teach you what complex numbers are, but I can teach you how to count 1 + 1 = 2. So new members, go on Google, find out what futures are and all that stuff. Or if you really want to get into and I have to spend time teaching all that stuff, then sign up for the advanced coaching sessions where I will teach as much as possible from the basics, like the alphabets, A, B, C, D, E, F, G. Right there, you go. That is not what we do here on these midweek and weekly webinars. So saying all that, let's take a look at this E-mini here. So heavily volatile. It's pretty self-explanatory. These are levels. The green lines are the levels that the market will approach from the bottom. The red lines are the major support levels. This is a, again, before I go any further, because I really don't want to make this webinar long, and I certainly want to encourage many of you members to go spend time on my real-time Twitter feed, because I actually explain the patterns and everything, and that takes a lot of my time during the day. Believe me, I could just throw out a chart and make no comment. Whether it's an inverse head and shoulder, whether it's a cup and handle, blah, blah, blah. I actually put those things down. So I'm not going to repeat them here. I'm just going to show you, what's going on. So at this point, this is the top of the trading range. That's around 31.37. We almost got there at 4 p.m. And right there, as it got close to it, as it went over this Bollinger bands, these two, the cloud bands, there was this sell program right at 4 p.m. right there at the end. Now we're pulling back a little bit. It still looks like a bull flag. And that bull flag is why futures are down about 22 points right now, right there, this one. So when I look at it from a technical basis, it's not worrisome. When I look at futures down 22, or a lot of people will look at that and they're like, oh my God, what's going on? Well, nothing's going on. It's the same old stuff going on. The coronavirus is spreading. It's slowing down in China. It's spreading across the globe. California has put itself on emergency, not lockdown, but an emergency thing because of 53 cases, I believe, what I read. So obviously the markets are reacting to that. And but by now, markets know that we have had the ultimate B12 injection which is a 50 basis point, half a percentage point cut on our Fed funds rate. So borrowing costs are plummeting. I was just reading an article on Bloomberg when I was trying to take a little rest a few minutes ago, that these big mortgage lenders, they can't keep up. They can't keep up. A mortgage loan officer will make more than $1 million this year because of these horrendous interest rates, which now have collapsed below 1% on the 10-year government bond. So everybody's rushing out there to refi and get home equity loans and blah, blah, blah. So they can't keep up with the processing. They are out there hiring thousands of loan originators, processors, call center thing, everyone from Quicken Loans and all the other big ones that's out there. It's a wild, wild west right now because of rates, unheard of. So saying all that, so that was big what the Fed did. The markets first went up and then they pulled back. It was sudden, but it doesn't matter. Why doesn't it matter? Because this is the trading range that I said the markets should travel in, and that is 29.82 and 31.37. So as a technical trader, I'm watching this very carefully. If it broke below this, we would have a fair chance to come back and revisit those 28.55 lows. That means another 700, 800 points down. But we didn't. Well, we didn't. Then I also told you guys that about if Biden is close to winning the nomination, that these healthcare companies, which are a good part of the Dow Jones Industrial Average and the S&P 500, would rip. In fact, I have a text from a member, and I said, you know what? Buy these because if Biden wins, it's going to be up $10 to $15. I was talking about ANTM Health. Does anyone know how much it was up today?
15%.
Dollar-wise. It was up almost, yeah, you're right. Dollar-wise, it was up because the 15%, the reason most people won't understand it because most people can't remember the price of the stock. So it was up almost $40. United Health, these are household names, was up almost 27, 26. Humana, everybody knows these names, was up $42. Or maybe a little bit more at the highs. Closed it up 41, 12%, 15%, 10%. Those were the percentage moves in 3 of these names that we consistently trade. So it was a gift given to all of you guys yesterday. So the ones who took the gift, you guys are in profit heaven. The ones who didn't, you guys are in hell, in regret why you didn't do it. So don't keep on making the same mistake, all right? Those chances don't come too often. So let's get in the technical side here. So this is your range. So I'm watching the range. This is where we are right now with futures down 24. To me, I'm fine. I took a large amount of profits today, and I have sections of things in there. I didn't jump in and add everything that I put yesterday and all the profits and just say, that's it, the market's going to keep on going hard. No, markets will pull back a little bit, then it will attempt to make another move higher. That's standard procedure. I've explained it to you guys hundreds of times. I'll explain it to you guys again. That's just the way markets work. So right now, and this is one support level, 30.45. That's another 45 points from here. That's another 300 points just from here to here on the Dow Jones Industrial Average, more than 300. That's also the uptrend line, this green line. It should, which basically where the markets bounce from. So either it's going to bounce from here. If we fall down to 300 points, we could be down 40 S&P points, handles, E-minis by the time you wake up tomorrow morning. Believe me, everything's going to be blood red again. But if it comes down here, most probably it's going to bounce. If it breaks that, then we're coming to the bottom of this channel. And if something else dramatic happens with coronavirus or anything else, then if this breaks, I'm shorting. If this breaks, the few hedges that I had yesterday, I bought those puts just in case. I managed to actually sell them almost at a profit because I bought them around $3. They went down to about 40 cents. But the markets opened up that big. I bought more at 40 cents. I said, what the hell? I have so much profits on the other side. I do this all the time. And they went back to $1.10. I was almost even. I got out. So that's how professional traders trade, or at least tactical professional traders trade. So I didn't even have a loss on my puts. Forget about my calls and stuff. And you guys can do it too. Believe me, it's not hard. So anyway, so that's it. So at this point, if you look at it, this is what I'm looking at max upside. I've mentioned this many, many times on my Twitter feed, mentioning it again. So you can look at this as a large cup and a sideways handle. That's the way I look at it. If it breaks above this, the market's going to make a sharp move higher. First level is 3,200, then 3,240. That's another 600-700 points. Will it happen immediately tomorrow? I don't know. It can. It can. I believe the California primaries are tonight. So if supposedly Biden and Sanders are almost neck to neck there, even though Bernie Sanders was running a lot higher in California, now Biden, who got most of the southern part, South, which is really how the elections are won, or at least his nomination is won. So basically, if California goes to Sanders, markets might have a little dip. Not that it matters. Sanders win, he's lost, he's done. Biden wins, at least there will be a little bit of a democratic fight between President Trump and Biden. And this market going up like this, the healthcare insurers and everything, is Wall Street in a way saying, we love Trump and what he's done for us, but we wouldn't mind if just in some case Biden wins the presidency. That was how Wall Street votes, with money. Just so you guys understand how it works, all right? So the market's not going to collapse if Biden wins the election. And if Trump wins, great. Let's move on. Higher. Biden wins, higher. Sanders wins, initially we're going to fall, then we move higher. Okay, let's move on. So that's it. So this chart is pretty self-explanatory, and please use your, so this is the max move. This is the way I look at it. This is a large cup. Here's your wide handle. Remember, this is a cup, this is a handle, right? So this small look that we're seeing here, today's move, is basically a bull flag still. Levels of engagement where they should bounce from are all noted, the red line supports and all that stuff. And of course, it is for people who are somewhat technically orientated. This is also a complex W, a double bottom, triple bottom, quadruple bottom, inverse head and shoulder. So far, so good. It got overbought. Now it's resetting. Next chart. Oh, sorry. This is a 15-minute chart. This was a 1-hour chart, so it's got lesser noise because each candle is 1 hour. This was the Fed move. Boom. Right on that move, I told you guys, sell a bunch of stuff. It was beautiful. It was just, and it was only, the move was lasted for only what, 15 minutes? Great. 15 minutes is long enough time to take some serious profits. It takes 1 second to sell something and probably a few seconds to get the trade executed on the platforms that you're using. Not Robinhood. They broke down because they're full of garbage. Robinhood is full of garbage. You know, I think I still have some brains. I still don't know how to use Robinhood. I have an account with them. Only time I've used Robinhood is when I was playing some Bitcoin and made some nice money. That was what, last year? Their charts are horrible. They're like squiggly lines. Free trades, everybody's giving you free trades. Does Robinhood give you, did they charge you for options?
Options are free on Robinhood, no contract fees.
Wow, that's pretty good actually. But then on the biggest day that you could make the most money, they broke down. So, you know, They're not going to get sued because it says in their contract, all platforms say, hey, we can't guarantee that you're going to have on time, full time thing. If it breaks down, they just say, okay, technical issues, nothing we can do. All right, let's move on. But being a chart guy, I can't use Robinhood. But for a smaller account, sure, definitely do it. But that's up to you, whatever you want to do. So bottom line is, this is where we are. Next chart is the same chart in 15 minutes. So it's more lines because each candle is 15 minutes. And you can see here, I can see here very clearly, and I told you guys exactly what was going to happen. This is your huge downtrend line from the top, from the recent top, which was 26th of February. And guess what we did? We went exactly there. Lo and behold, the magic of clueless day trading charts. No kidding. Not the first time. It hit it here first, a couple of days ago, and today punched through it. 1,173 points on the Dow Jones Industrial Average. Second, or the biggest increase ever, numerically speaking, 4.5%. God help us. Anybody who didn't make money today needs some real serious mental and technical help, like intervention. All right, seriously, like real intervention. Seek help from me. I'll tell you the resources, how you can get the most help. But seriously, if you didn't make money today, this should be the day that your life should change for the better. And if you made money today, great, feel good, and let's get better. That's what I tell myself all the time. If you made serious money today, that means you did something very right. That's great. Congratulations to those people. So bottom line is that right now I'm looking at this acceleration channel, these two lines, and that comes into play at 30.75 on the downside. That's another 25 points from here. So that means that's another 150. So that's another 25 handles. So we are down 25. Listen to this carefully. We are down roughly 25 points on the future, 25 handles as they call it, right? From the top. From 4 o'clock. If we fall to the bottom of this channel, this rising channel, which I consider to be short-term support, that's another 25 points. So if we fall here by the time the markets open, we're going to be down 50 points. People will be freaking out. You know, you turn out Bloomberg and Fox Financial Network or CNBC or whatever, and they'll be like, here we go again, it's all over. Because those idiots have no clue. Remember, reporters report. We make the news. They just report it. So they want to make sensational headlines. That's the job of a reporter. They're doing nothing wrong. They want to get you going. And fear sells the most. Fear sells the most. That's why they're mostly all negative human beings. All right? So 50 points. Do I want to see 50 points down? No, but I don't control the market. I accepted that a long time ago. And all of you guys should. So, all right. If it breaks this, I'm shorting. Because at that point, this level where the cluster was early this morning and today, well, before markets opened actually, and yesterday, this cluster. So we're going to hit that cluster again. And that's a lot more down. So I know what my roadmap is. And you guys need to get used to looking at this. There's nothing I can do. If we manage to bounce off here, then we'll attempt to take out this big downtrend line, this big fat red line right here. And if we can take this out successfully and stay above it after it bounces, I want most of this downward move to happen during the night. So by the time we open, we'll be quite deep oversold, and on a technical basis, we're ready for the bounce. And if it breaks this out, the next level engagement is right here, 31.35. If something miraculous happened, like a report comes out of China or from Italy that corona cases are falling dramatically. In China, they've slowed down. Let's say Italy says, yes, doing a good job, we're seeing lesser cases. Boom, the markets are going to go. It's going to be another 800 points. Your head's going to spin. If you're not in it, you really got to think about if you ever want to be a trader. But we'll try to help you as much as possible. All right, next chart. This is known as Andrew's pitchfork. Want to know what technical pattern that is? Go to Investopedia, type in Andrew's pitchfork, and they'll explain to you what it is. Okay? So this, you can see, is extremely accurate. Now, I use it once in a while. I use it more like during dramatically volatile 6, 7, 5, 600 point type of movements. And you can clearly see I had to adjust it a little bit. And I adjusted it based on what was happening on, 1 second here, since March. This is February 28th, which was Friday, right? So you can see how accurate this is. One thing about technical analysis, you gotta appreciate the beauty of it. And most importantly, you just can't randomly say, oh yeah, that's a technical thing. You have to structure it. That's my job to do. That's why you paid a few bucks every month to take my trades, understand all this stuff, and hopefully make a lot of money, or hopefully lose less money. That means you're gonna make more. So bottom line is the beauty is like astounding. Look at that. These are upwardly rising channels. And as I said today on one of the posts, climbing the channels. So now this pullback here, minor pullback, it's a bull flag, right? Bull flag, looks like a horse's head, is where the S&P futures are down 26 points. What it's doing is standard procedure so far. This big downtrend line, right? The big downtrend line, it is retesting it. It is retesting it. Is it going to retest and just jump from there? I don't know. It can come down and test the lower end of this channel. That's another couple of 100 points down right there. If it breaks this, then that's a different story. That means you can short the market because here comes another level of support. So that's how it works, guys. That's how it works. Now, why are these things so important? It's important for futures traders, of course, because they can be trading right now and making money, shorting and going long based on my levels. More importantly, it's important because these are the levels that the market's going to pull back or rise from. That means your P&L on the trades you're doing will do accordingly the same. You're trading AMD, for example, which we're making real decent money on. At the close, AMD calls were up an average of 60 to 90%. The cheap calls, the AMD 49 calls, 50 calls, these are very cheap, and they're the best ones to play for smaller traders, bigger traders, doesn't matter. They move. You buy them at 60 cents, they go to 70 cents, $1, $1.20, $1.30. It's amazing. So AMD, for example, you based on what's happening, and of course looking at AMD's charts, you would say, okay, if market's getting overbought here, the machines are going to come in, and that's exactly what the machines come in, right at the top of the range. So you got to sell there or take some profits. That's how I know when I say sell full or partial profits and all that stuff. Am I just saying that on the top of my head? No, I'm saying that because that is what I am seeing. That is my level. This is the box the market will travel in. If things get really extreme, we're going to come to the bottom of this box again, which was the bottom of the market on Tuesday, which was when things were just being given away for free. And I'm sure some of you bought, and I'm sure some of you didn't. Some of you didn't. I'm really sorry to hear that. Okay, so this is the box. The box is going to back up, but the box is going to break down. We shall see. You guys with me so far?
Yeah.
And can I ask who caller 1 is? Caller 1, can you identify yourself?
I just signed on, Frank. It's Ray.
Oh, okay, that's fine. I just, so you just change your thing to caller 1 to Ray, so we know, because sometimes we get people stepping in. I don't know who they are, and these are private sessions for my service, so that's why I asked. No problem. So
Yeah, no, I didn't change my name. I don't know. I guess it just came up that way, but no, I didn't change anything.
oh, okay. Yeah, it came up as caller one. You can see that under the chat. All right.
Okay.
Let's move on. So bottom line is, over the next week or so, this is what the markets are going to do. Either they're going to break out towards another 6, 7, 800 points, or they're going to break down. In the meantime, they're going to stay within these channels, which is totally fine with me. Totally fine with me. If it breaks this box, if it breaks this, these are channels, they're not hard. If you break a channel, you're going to come down. It's really as simple as that. Okay, let's move on. And again, you don't have to fully analyze these charts and stuff because I'm doing that for you. But I just want you guys to get as much of the messaging as possible. The more you look at it, the more you're going to understand it. It's not hard. In the meantime, if you don't care about all this stuff, just buy a trade and just sit on it. And then if it goes higher, you sell it. Oh, by the way, just want to remind everybody, you can put a stop loss on an option, right? That you're in on a call option or a put option. Did you guys know that? Yes or no?
Yeah.
Okay. What about the rest of the crowd here? Did you know you can put a?
I know about that.
I didn't know that.
Okay,
Yeah.
so now you know, just like a stock, you can go in there. Let's say you bought a call at 2. You don't want to lose more than 50% of the money because of the movements in the market, even though it's going to probably go higher after it sells you out, because that's what the machines do. They suck the most people out and bang, they move forward. Why? Because they got to pay less people on the way up because they're already out. Simple, right? So the machines just do it very fast. So let's say you buy something at 4 and you say, you know what, I'll put a stop loss at 2 because I don't want to handle more than a 50%, even a paper loss 50%. Fine. So you can put the price at 2, sell, limit, boom. It gets close to that, it takes you out. You don't even know. I mean, it's automatic. So you could certainly employ that. At least you got 50% of your money to go back in. I use stop losses mentally mostly because I'm constantly engaged with the market. And sometimes if I have a bigger position or a heavy call, like worth $6, $7, $8, $9, $10, $11 for one contract, that's like $1,100 to buy one call, I'll put a $6 or $7 stop underneath it. So the most I can lose if I buy one, 400. And then I can always get back in because I always have cash on the side. Whether it's a small account or a big account, you always have to have some cash on the side, always. Because this way you can react to situation. You guys understand what I just said?
Yes.
How much cash you recommend?
What the hell are you talking about? Do I even know how much money you're trading with? I mean,
No,
how
no,
much
no.
cash do you recommend? Or what,
Like
percent?
on the side.
Yeah, like on the side. What, do you want me to give you a number? I'm just asking a simple question. You asked me how much cash do I recommend to be left on the side. How do I
Yeah.
know how big your account is?
Or percentage of your account. Better
Percentage.
question.
That's a better question. I already explained that on my first advanced coaching session that you sat in as a complimentary guest. On a small account or big account, anywhere from 30 to 40%.
30 to 40. Okay, that's good.
Yeah. Now the problem is if you have a very small account, if somebody has a very small account, if you put 30 to 40% of cash, you don't have much to play with on the other side.
Yeah.
If somebody has a $20,000 account, 30 to 40% is $6,000 to $8,000. That's a lot of money to be sitting on the sideline because you can do a lot with that. I know certain members with an account less than 10,000, they do almost 4,000 a week.
Yeah.
Because they know how to do it, and they have worked with me very closely, and that's it. They do literally anywhere from 2,000 to 4,000 a week. That's $8,000 to $16,000 off a capital base, a trading capital base of 10 to 12,000. Go find another business that gives you that type of return. Now, people say, "Oh, how do they do it?" Well, how they do it is because they took the time and energy to do all the advanced coaching sessions. They still do it with me, and then at the same time, they move a little bit faster. They have a cash account so they can use the money when it settles the next day, and they move on. And then I have members who have $50,000, $60,000 options account, which is, and they still can make 2,000 a week because they don't know what the heck they're doing. It is not the money that makes you the money. It is your skills that make you the money. And I know members who have taken $2,000 accounts to 12, 14, 15, 20,000 over the last 4 or 5 months or less. Like that lady who allowed me to put her feedback. She took a $35,000 account, turned into 100,000 in a few months because she took nice positions and the stocks moved. And the stocks, which mostly she trades, are the ones I give. And her own ideas. But mostly she made it on Netflix and Apple and these stocks that we normally trade. Tesla was now the one she made a lot of money on when I first told people to buy it. So if you guys are all, like I say, it's like, this is a lady, for God's sake. She's a nurse. She's a specialized nurse with kids and stuff. She's been with us for a long time. She's gonna be one example. If she can do it while she has a full-time job, what excuse do you guys have? I know you guys have full-time jobs too. And she's smart, but she's not like some technical genius or anything, but she did make a very concerted effort for 2 years to really understand the whole thing. And she's made money before, but she gave it back to the market. That's the problem with the market. You can make a lot of money on a great trade, but then the market will snap it back from you and snap your head. Because the market is a cobra. You never make friends with a cobra, right? Because it's going to bite you. So that's what this technical markets are. Next chart. So generally speaking, the answer to Franco's question, yeah, 30 to 40%. Sometimes more. When markets get really volatile, more. Cash is king because you can use it, not to sit on it. So here is a chart which was the Fibonacci retracement from top to bottom, this monumental crash. Explained to you that this was a doji candle. Indecision, but green. That means more people were kind of like, the more of the robots were still kind of betting that the markets go higher. It doesn't show the internals, just showing this. And the next day, boom, it fell and then it rose. Then yesterday, this happened. Most people freaking out. I didn't freak out. Why? Because I said it. Can somebody tell me, aside from Zafar, can somebody tell me how many times I said what this structure of this candle is yesterday? And there are two Fibonacci. One is the big Fibonacci levels, and one is the small one, which I constructed primarily because that's what the market had risen to yesterday. Remember, the market was up yesterday, especially after the Fed came out with their rate cut decision. So this was already put in place. This is the secondary Fibonacci level. That's why it's in dotted blue. And guess what it did? I put it out there. It stopped exactly there. Now, what is this structure of this candle? Please, Z, Mike Harrington, no answers, please, from you guys.
Oh,
The rest of the people, I need to know, because I put it quite a few times down. What is the structure of this candle? And I said, technically, it's still a positive one. Nothing, it hadn't changed. I expect markets to go higher. What is it? And please don't take all night. I know you guys are very focused, but I've said it at least 7 times. Aldi? Everyone's like dead quiet now. So does anyone know the answer? Just please don't waste my time right now, because it is 9:31.
I don't know the answer.
Right, that's
No.
because,
Yeah, I know the answer.
no, I don't want, who is that, Mike? I don't want to answer from you, because I know you know. I said it many times, guys. This just shows the lack of focus. I'm not pissed off. I ain't your grandpa. I'm not your dad. Okay? I'm just saying, you guys are completely unfocused. It is called the inside day candle. I said it many times. Wrote it down for you guys. You guys are completely unfocused. So you deserve to lose money or not make money. Wait, you think I'm being tough? I'm telling you the truth. This candle alone would have kept you in the game with the market down 782 points. I said it many times. It's an inside day red candle. You want to know what an inside day candle is? Go to Investopedia. It means the body of this candle, this green candle, All it did was it took back half the body of that at the Fibonacci 50 level. If it had fallen below this, that means most of the buying that happened the previous day, that money would have swept out of the market. But it didn't. This body of the candle was still within half of the body of this huge move that happened on Monday. It's called the inside day red candle. And I said it many times. So I just proved the point that most of you are just not focused. So maybe this will be a good start for you guys to really start focusing a little bit more. And you don't have to memorize these things, but hey, you know, these are very critical stuff. So anyway, it stopped right at the FIB50. And then today came down a little bit and boom. And guess what it hit? The big Fibonacci 50 level. Now, what does that mean? That means that the market needs to pull back a little bit. And this is what it's doing right now as we are speaking. Right there, this one. Right there. Right there. Now, I wouldn't like it if it fell another 20, 25 points. That means we would be down 50 S&P points when we open. We would be back to this level. It's not that I wouldn't like it. I wouldn't hate it. But if it breaks this, and it breaks this line, which is this red line here. Remember, red lines you don't want things to cross red lines. If it breaks this, I'm going to be looking at a short, but the markets are so fast that I don't want to put out puts unless I'm convinced, or at least technically convinced, that it's going to go down. Because when I buy the puts like right at this level, guess what the market's going to do? It's going to bounce and I'm going to lose money on that. That's why when I play with puts in this type of movement in the market, I'm very quick. Most people at the height of the bottom, they say, that's it, I'm shorting the market. A lot of traders do that out there. And guess what happened? The market eats them up alive and spits them out. So this is still fine. At these levels, that means another, with futures down 50 or so, I'm going to see whether or not it's going to stick. So this was such a classic chart. It should be put on the Goldman Sachs Hall of Fame. Well, a lot of my charts should. This is like so accurate, it even boggled my mind. A long time ago, many years ago, when I started doing technical trading, and I did get some training with some big names, because I've told people who on Wall Street, you get to sit with their seminars and stuff like that for free. And these people were brilliant. Tony Dwyer, who you see him on TV, he's brilliant. He actually he was a technical analyst in one of the firms I work for. And then Ralph Acampora, he's an old hand in the business. Luis Yamada, this older lady, she's like, what, 70 some right now? She was brilliant at that time. Then my favorite is Katie Stockton. This nice looking lady, she's brilliant. Like, I would say 7 to 80% of the time, what I'm talking about, she's validating it. And I've learned a lot from her. I think she has her own firm now. Katie Stockton, look her up. Brilliant. So like they say, you always want to learn from smart people or people smarter than you. I love those people. So anyway, I got that. And as I was doing this stuff and my technical charting was working, I used to trade, but I always sold too early. I never bought too late. I was sold too early. So I told myself one night, many years ago, and it's true, I got to stop believing my own bullshit. I got to start believing that what I'm doing, there is a method to this madness. And that's what I try to do every day. I really try to believe, like, all this stuff that I'm doing, which are so frigging accurate, that I gotta really play them 110%. That's what I fight for every day. Everyone has their own challenge, right? But sometimes, we all slip and slide because these frigging machines are so fast, it messes, forget my brain, it messes with my trades. It doesn't mess with my brain. It might mess with other people's brains. It's just so fast and so quick, like, it's just difficult to manage. So that's it. So this is so far so good, and everything looks good so far. Let's take a look at the next one. This is brilliant. This is the QQQ, which includes Apple, Netflix, all the big tech companies, right? And the big biotech companies, the NASDAQ 100, which includes techs and biotechs. So biotechs were strong today. Believe it or not. So yeah, so if you look at this pattern at the close, it's very bullish. This is what happened yesterday. And at 3 o'clock, it basically closed, market closed around here, right around there, and then it opened up here. So the next gap fill is up here. Is it going to happen for new traders? They're like, oh man, it's great. You know, this thing's going to just shoot up there. No, it doesn't do that. Nothing goes up in a straight line. It zigzags its way up. For newer traders, they have to accept that concept. And those zigzags, the stair step that it does, one step down, two steps, one step backwards, two steps forward, one step, two steps backwards, three steps forward, is what messes with traders. But that's the market. If you want to be a trader, you want the market to give you FU money every week, not every day, every week, then you got to accept these facts of life. Okay? Seriously. This is not Wolf of Wall Street crap. Those guys were scammers. They were the ultimate sales. Like, you know, they would be selling to old ladies and stealing their money. That's not your idol. I see a lot of these trading services, Wolf of Wall Street stuff. Yeah, Jordy Belfort. I've met that guy. Total scumbag. And even now he's making money. Be telling the world that he was a sinner. He's still the same scumbag, in my opinion. That's my opinion. What is a reformed prophet? Wolf of Wall Street. The only thing he had hunger. He had passion. That part I can agree with. But passion and hunger by killing other people and stealing their money is not my idea of life success. If that is yours, then leave my service. They had no idea about the stock market. They were selling bullshit penny stocks and bullshit companies which never existed. All right. So bottom line is that when you look at this thing here, it looks like, yeah, it'll go there. Maybe it'll back and fill a little bit. But if things don't go crazy with this coronavirus stuff, which is pretty serious stuff going on, guys, that school up in Riverdale, Northern Bronx, I think it's a private Jewish school, and there's the kids infected, the whole family is like quarantined at their home. God bless them. What if it spreads down to New York City? There are people from the Bronx coming down to New York City. Then you see the market fall another 1,000 points. Told you guys that before. So technically, if things start to ease back here, we're going to head towards this side. Otherwise, just trade this pattern. Next level of support is right there, right there. So you can always play these QQQs for 2 points, 3 points. Yeah, you're not going to make 1,000% like United Healthcare. That's a different story. But you'll make 60%, 80%, pretty good. With less volatility. Like if you buy a call at 2, unless the market goes down 600 points, they're not going to be 30 cents. That can happen with a Netflix or a Tesla any minute. But it might be fall like 40%. Yeah, okay, then you can buy a little bit more. So you don't completely like, you know, the options are less volatile. So this is your techs and biotechs. Next chart. This is the chart that is starting to, which is going to determine what's going to happen within the next couple of weeks. We are starting to see a very nice movement down here, right? The MACD is starting to, the MACD area is, you know, starting to come from deep negative. It was minus 62. Like I told you, these readings were so horrendous, it wasn't even funny. You know, that's very tough analogy I gave about baby with the bathwater and then the mother, father, grandmother all like, you know, thrown out and shot. So this is pretty much what happened in the market. So at this point, we do have a turn. However, this turn, if things go completely wrong and we come down, let me show this to you guys. So I'm warning you, like these things can happen. So if we come down here, we're still in an uptrend, mind you. This will do a double bottom. Maybe it's going to do a higher low, the stochastics. That means it's going to be like this. That's known as a positive divergence. It can maybe come down here. We could drop below 3,000 again. Can happen real fast. And this one, instead of like going like this, like like a definitive turn, it basically kind of wavers around a little bit. So those get really tricky. So I'll let you guys know if I see that. If I see this small red candle, which is futures down 23, expand into a large red candle, I will be all over it. So this is a daily chart. What is that's I'm showing you like what can happen wrong with the markets. Now let me show you what can happen right. What can happen right is, let me zoom in. Oops, sorry. This is your 50-day moving average. Don't forget, that's the magnet. When we were down here, I told you we are heading towards the 50-day moving average. No question about it. And if we fail there, that means the market is going to fall more. But it's a long way up. Let's try to ride the wave up till there at least. Now, what else is important on this chart? And I want the newer members to look very carefully. What is a very important line on this chart? Aldi. Because unless you guys see what I see, you'll never make it in this business, or at least on my service as a technical trader. What is a very important line on this chart? Aldi. Which one catches your eye? Please look and answer. We don't have all night, please. Aldi, can you hear us? What is a very
I could hear you.
what is an important line that you see here that catches your eye? First thing when you look at the chart.
The uptrend line, the one going up.
Yep, the uptrend line. What color is it?
Green.
Exactly, this one, right?
Yes, that one.
Exactly, perfect. Thank you for the answer, because everyone else who heard that directly from you will now appreciate that. So what happens at the uptrend line? There's a battle. So we came up to the uptrend line yesterday when the right after the Fed cut rates, boom, and it was rejected. We almost came up to the uptrend line today, and we got rejected. Well, slightly rejected, not that much. It's still a very large blue candle. So my question is, if this uptrend line again rejects it for multiple days, that means this uptrend line is like the wall. Okay, you can't cross it. So that means the machines are going to give up and we're going to fall hard. Okay, so that is the negative part of it. Now, these things, if they keep on turning, then these bars, these 600-700 point type of days in the market will gain more steam and break above the uptrend line, which would be beautiful. Which means the shorts at that point are like, oh boy, man, we're back over the uptrend line, and you know, we're going to cover more. Because at this point, you can mute your microphone. Thank you for your answer, sir. So this uptrend line is the first thing which it catches my eye. I have a red arrow here. That means if we get up towards the uptrend line, like another, let's say 300-400 points, again, expect sell programs. Now, if it doesn't, then it's going to do this. Then it's going to do this. And go up to the next green line, which is next resistance, 32.14, blah, blah, blah. Now, the 50-day moving average is here. Before it crosses over and kisses the 50-day moving average, it's got to go over the 34-day moving average. This is still a negative picture going out week or a month, because these lines now have crossed down. That is negative, but doesn't mean that you can't play the bounces. Does everyone understand that part?
Yeah.
Yes.
Yeah, so this is not necessarily a very bullish chart, if you ask me. I mean, looking out. That's why I'm keeping my time frame short. Yeah, I might buy a call a week, 2 weeks, 3 weeks from now, right? Into April and stuff. It doesn't mean I have to get married to it and keep it. I can sell it. And some of these biotech stocks have nothing to do with these movements. They just play upon their own stories, right? So those ones I don't worry about. But if I'm going to play the Apples and Netflix and stuff, I got to watch these charts very closely, or at least look at it, you know, when I'm posting it. So thanks for the answer. All right, so that's it. Let's look at the next one. The next one is basically the same story. This one is a little bit more bullish. Look at somebody, please mute the microphone, please. Thank you. So this was huge 2 days ago. Today's Wednesday. Monday, look at the volume. Like hallelujah. Look at the green volume. This is how much money went into the market. 383 million shares of the SPY was bought. This is not futures. This is just the SPYs. Look at that. Forget about the number. See you later. So this was not Monday. I'm sorry. This was the 28th on Friday. Then Monday, there was nice volume. Today's volume was actually kind of low. See that? Compared to these last couple of volumes. Yesterday, a bunch was sold. Look at that. So key is that at this point, it is this dotted line means that, oh, this is looking fine. This is looking fine. That means the stochastics are still moving up. Trying to determine what the market is going to do. This red line is known as the gap. So we need to basically break above it. So far so good. Looks fine. Let's take a look at our favorite chart, which is the New York Stock Exchange McClellan oscillator. Now I put out a thing here which you guys might have seen. That's why I told you guys to listen to review the Twitter feed before you came, because I found it to be very amusing. This, not this. Where's this? What is going on? Who is this man? This man is Kramer, very successful hedge fund guy, worth millions. He's explained the oscillator, what he calls the S&P short range oscillator. Isn't that exciting? We've been explaining oscillators forever, but more so importantly, well before it makes the news. And that's why I wrote it down. We were coached and explained and analyzed New York oscillator, and this one he didn't even explain it like that clearly. He just said, oh, if it goes to -12. This is a different proprietary oscillator, but it's still based on oversold, overbought conditions. And so according to this oscillator, his guy, he's not the one who makes it up, he's not a really technical guy, it's his people. Some other guy that is a well-connected guy, on the technical side, gave him this. He goes, yep, could be signaling an opportunity to buy. So here's my question, ladies and gentlemen. Where was he when we were looking at the oscillators for the last 48 to 72 hours? And we called the exact bottom in the market? Think about that for a minute. They're coming 3 days later. But it's a good thing, because these guys are the big guys, right? So right or wrong, at least he's putting it out there, and mom and pop would say, oh, great. Kramer said, look at that oscillator. Let's go buy some stock. Maybe they're not going to buy some stock, but maybe they're going to stop selling by calling their mutual fund people and their financial advisors and saying, sell, it's over. I got Corona inside my portfolio. So maybe they'll say easy on the selling, which will help the big robotic funds to stop selling during the day. You understand what I'm saying? Did you guys understand what I said?
Yeah.
Yes.
So basically, it lessens the selling pressure in the market. That's all I'm saying. Because when mom and pop's calling, like I explained to you guys last week, and they're screaming at their financial advisors and their mutual funds, Fidelity, all this stuff, Oppenheimer, to say, hey, listen, please sell my fund and put me into cash. I will come in when things are right, because that's what everyone thinks. That's what most traders think. Like, oh yeah, I'll come into the market when things are right. Dude, by the time things are right, it's all over. It starts again down. All right, you got to buy when things are wrong. Well, within levels. So bottom line is that at least it lessens the selling pressure in the market, which I think is good. Okay, so now we have the drum roll, and yesterday the oscillator. Now here's the interesting part. How much was the market down yesterday? How much was the market down yesterday? Any of you have any idea, or you guys like live in a different parallel universe?
25 points.
What the hell are you talking about? How much was the Dow Jones Industrial Average down yesterday?
Oh, let's see.
Okay, you guys have no idea. I'm really shocked. Okay, market was down almost 800 points yesterday at the close. Okay, so that's why I'm saying, my friends, and you guys are the new crew, you guys need to be a little bit in more touch with the stock markets. All right, please, because that's how you're going to make more money. You guys you can't be that completely disconnected from the stock market, not even know that yesterday we were down 800 points. I even mentioned that several times in my webinar, and then expect to make real money in the market. Like they say in life, respect yourself more by being more knowledgeable, and then that respect will translate into more dollars in your pocket. So anyway, it's kind of funny. So bottom line is that if it was down 25 points, I would have loved it. No, actually, I wouldn't have loved it. Then I wouldn't buy anything cheap. Everything would be still expensive. So, all right. So bottom line is, yesterday we were down 782 points, almost 800 points. Now that we have established that fact. Are you guys with me?
Yeah.
Yes.
Okay, look at this. This is known as a positive divergence. The day prior, the oscillator, New York Stock Exchange McClellan oscillator. This is my proprietary indicator. Not my proprietary indicator, but this chart can I update it every night at around 5:30, 6 o'clock, and I haven't updated it yet. Okay, so we'll see it. Yesterday we were down 800 points. At the bottom, on the day that the market rallied on Friday, we still kept on going down. We were minus 136. You guys can see this?
Yes.
These are horrendous numbers, like I've explained. Like, it's never been seen. Like minus 99, this and that. I've shown that before. And it's back here, October. I'll show it again. Are like it's like a time screaming by. But this is not just a screaming by. This is a virus by. Like, it's a biological. Like Kramer said, it's a biological attack on the markets. So the technicals can go out the window. So let me just go out and put it. Let me do 6 months and see. And I've shown this before. The most we ever got to was during the Christmas Eve massacre, which by now you guys know because I've said it like a zillion times, December 24, 2018. At that time, people just said, okay, that's it, it's over. And December 26th, the markets went up 1,000 points. So everyone gave up and the market went up. So let me just clean this out for you guys. This is very important. So let me just show it to you. December, last time it ever got to that level, I've never seen these numbers this bad. 109, like, oh my God. So when you normally get to these levels under normal, not normal market circumstances, even like 600, 700, 1,000 point type of down days, minus 97, minus 64, minus 66, minus 65, minus 78, minus 65, minus 63. Buy. Okay? But this time is different. There's a lot of stuff happening too fast. We get to 136, even though we were up on Friday. Then on Monday, we were down on Monday, the market. And were we down on Monday? No, we were down on Tuesday. We're up on Monday. So basically, it only went from minus 136 to minus 135. Basically, when things get really crazy and they're just selling everything, this number gets deeper and deeper in the red. You guys are with me on that, right?
Yes.
Luis, you understand what I just said? When the markets are like heavily down, then these oscillator gets lower and lower on the negative side. You understand?
Yes.
Okay, good. Very simple to understand. Not a big deal. Now, the thing is, when it goes to minus 136, I would think, like, oh my God, you got to buy. I did say, like, at this point, there has to be a turn. It just, nothing can go like forever down. There are short-term bounces, then they sell those, whatever the case may be. So bottom line is, this is the interesting part that I found. On Tuesday, we went down 782 points yesterday. You guys are with me so far, right? We closed at the lows of the day, right? From the highs, we closed at the lows. What did the oscillator do? It went from minus 135 on Monday to
To 136.
one second. No, it actually went up. 1 second, 135. This oscillator went up actually. 1 second. Am I looking at it right? Hold on. I see the 136 here, but that was not. Yeah, it went to 136. You're right. So it went to 136. I was incorrect. I thought it had gone up to minus 86. I was thinking, wow, the oscillator went up while the markets went down. Doesn't quite make sense. So thank you for correcting me. So the oscillator was 136. It's like, wow. Inevitably, you get a technical bounce. like we got today. So it's almost given. Now, I don't know what it's tonight. We're going to see it right now. So you guys ready? So we went up 1,200 points on the Dow. So let's go ahead, update. This is the fun part. They still didn't update it? What's going on? I guess the machines are like, got them messed up, because I see this moving up nicely, which is very nice. This is starting to turn, which is very nice. And where is the oscillator? It's still stuck down here. They haven't updated it. Wednesday, March 4th. Sorry, guys. I don't know why they, a lot of systems, by the way, are not updating because of the craziness. And that's why Robinhood collapsed, not because of their fault, because the systems were overloaded. Well, can't tell you exactly where it is, but all I know that these two stochastics and the MACD turning is a very good sign. And once it gets above 80, bang, they sell the market again. So I wouldn't be surprised if we get a couple more days of the rally till we get up towards the levels that we showed, like another 400, 500, 600 points, and then they hit the market again. Let's take a look at one more chart, which is just trying to figure out like where the markets are going to go, which is the 533. This is looking pretty damn good. Now, this is much more bullish, just so you guys know. Why does this crap keep on showing up? Okay, look at this. Don't have to be technical stuff, just like, just see it. 1 second. Look, this is a beautiful hollow candle. I explained it on my last webinar. Don't want to go into it again. Every time these two lines turn, which are known as stochastics or full stow, this is starting to shrink pretty fast, right? This was the hollow candle on Friday, very bullish, followed by another bullish day. Monday, Tuesday, we had an inside day. See, the body of this red candle is still within the body of this. Well, this is actually a green candle. You understand what I'm saying? So this is an inside day. It's okay. Everyone's freaking out there. I said, it's okay. Let's see. This is telling me that technically it's still okay. Not a high probability okay, but good. And boom, this was today. So what it's telling me is, as long as these lines keep on turning, and I've been using this for years and years, we could do this. We could just go a little bit up and fall. This is what I'm going to be watching for. A little bit up and fall, or we could go full scale ballistic up here. That means we're going to get rally all the way through the first part of next week, and at that point it'll be overbought, and that would take us towards the, remember, 50-day moving average, right, which is at this level, somewhere at this level, and bang, it'll be a V-shaped recovery, and then fall again, and we'll see what happens. So that's pretty much what the markets are going to do. Now, in the meantime, quick questions so we can wrap this up. So that's your market picture. I have walked you through the path, and that's pretty much what's going to happen. Go ahead. Questions, please. Aldi. Franco. Paul. Ray. Z. Mike. Questions? Guys, can you hear me?
This is the
Yeah, go ahead.
I saw a stock today, AVTR. Yep. I haven't investigated too much yet. It's been a recent
what's it called?
AVTR.
Okay, let's take a look at it. Hold on. Let's get the Thinkorswim platform in here. Oh, by the way, just wanted to show you this before we see AVTR. This is your weekly chart. This is still not good. I want this to turn. And I think you guys would all agree with me on that, right? We want the stochastics to turn, not point down. This is very nice. McClellan oscillators turning. This is your actual futures. We hit today, this is weekly. We took back the 50-day moving average. We took back the 34-day moving average. Here's your uptrend line. We need to push our way up there. And that's where the battle's going to be for the next couple of days, to push our way over 3161. We're not that far away from it. But you just forget the numbers. You guys see the picture, right? This is your uptrend line. Aldi pointed that out, right? This one. So we need to go above the uptrend line, and then we can zoom faster and higher. As a trader, I'm going to be trading this level here. If it falls below the red line again, that's no good, which is the 50-day moving average. Are you guys with me so far?
Yeah.
Okay, good. All right, what's the stock? AVTR?
Yeah, the chart didn't look so amazing, but the
Okay, you asked me the question, let me ask you. Okay, this is Avantor. I have no idea. What kind of company is this? And make it quick because we don't want
it's
to,
supposedly a chemical company, but a lot of good ratings on it, and recently it dropped, but I just added it to my
Okay.
list just to watch.
Okay, so the chart isn't bad. It's an IPO, so you really don't have that much time. This came out in May of this year. No, May of last year. Wow.
Yeah, I think you're on a
May-
weekly chart, that's why.
Yeah, I'm on a weekly bar, which is good. It's good to look at it zoomed out. Now, can somebody tell me? This is good actually. It's a cheap. I'm sure options are dirt cheap because this is only a teenager, $16 stock. So my question is, the chart is not bad. It's not bad, believe me. Okay, it's too new a company. It's less than a year, so we can't do like long-term charting. My point is the options are very cheap. Do they move? Because that's the question. Because the stock basically is a stock. This is a weekly chart, so every week it maybe goes up $1, $1.50. That for a fast options traders could be a little bit slow. In other words, you got to wait a long time for not that much money. So that's my only complaint about $15, $16 stocks. Do you understand what I'm saying? Otherwise, as an investment, great.
Yeah, investment. I was looking more of an investment more than
Okay, let's stick to option stuff here. No, that's totally fine. I'm going to dig into a company. Could be a serious company. It's a chemicals company.
yeah, it is. And it had like a lot of good ratings. Banks rated good stuff about it. So
What was the highest price target on this stock?
I think I saw like 20. I'm not sure, but
Okay.
Credit Suisse at 20, I think.
Okay, sounds good. I will certainly look into it. Nothing that I get too excited about. I need bigger price movements in order to generate that type of returns. Okay. Who asked me? Heisenberg asked me today, why am I buying ALNY? Why? Why do I buy something? Can somebody tell me why I buy something?
Yeah, you're a tactical trader, so you do your shorts and you follow the risk.
No, that's not my answer. Why do I buy something?
Yeah.
Aldi will know the answer. Aldi, why do I buy something?
It looks good. Once you see it, once you see the charts that they're moving up.
Come on, guys. Why
To
do we
make
ever?
money.
Thank you. God, you guys are like these old professors from Harvard giving me long-winded philosophical answers. We buy something because we goddamn want to make money, right? Exactly. This is funny. Tactical charts. Tactical charts, tactical charts. These are just tools to make money. But the end goal is to make money. Isn't that why you want to be a trader, guys?
Yeah.
Yeah, there you go. Go for the simple answer first. All right. So Heisenberg asked me, why am I buying ALNY? Because I got that, made money on it before, and I'm going to make money on it again. And I am. And technically, the chart looks good. And on top of that, did anyone read the comment I wrote on ANTM Pharmaceutical? Because I remember that stock, we were buying it here, boom, it went nuts. Then it pulled back a little bit. It's nothing. It's in a perfect bull flag combination, sideways consolidation. Did anyone remember? I'm not going to hold you guys to it because, anyone remember why I've always been long this stock. I keep on buying it like a month out, 2 months out, because I believe the company's going to get bought out. Number one, I've done my homework on this company, and it's a good looking chart. This is a daily chart. Okay, it just kind of moves sideways a bit, and boom, it goes. It's just starting the move above the 50-day moving average. Very nice move. And of course, the market clobbered it down from 134 to 110. I lost money on the cheap calls, and I bought the near the money calls, and I still have some of the cheaper calls out there. Now, what did I write about this stock? Does anyone remember? Why it is back in the picture again? Not just my picture, the picture of everything that is happening right now. What's happening right now? This is a biotech company.
The coronavirus.
Thank you very much. This company initiated trials on COVID-19. That's why I'm saying, guys, focus a little more. I wrote that 2 times today or 3 times on this stock. This is exciting. You think they talk about it on CNBC? You know what they're going to do? When the stock is up here, running, like it'll jump 4, 5, 6 points, like no problem. That's when they're going to put it on TV after the fact. And it's going to go up a little bit more, and I'll make a lot of money. Coronavirus. This is a serious biotech company, some of the finest companies in America. And they started COVID-19, which is the name of the coronavirus, the technical term. Research. Hello? So this is the type of stock I like buying. So what's the range? The range on the bottom is 106. The top of the range is 134. It moves within this range every couple of weeks. So if I can buy it on the lower end of the range, why not trade it up? So that's the reason why I'm buying it. So these type of companies, no one talks about. And if it does get bought out, forget buyout. Let's say they actually have a novel treatment that they announce and it shows up on TV, because that's what TV does, right? Shows the guys like, oh, these guys, we were buying Moderna since it was $19, $18 for weeks and weeks. And boom, all of a sudden it was on Kramer and it was all over the news, all over the government, government saying, hey, we're working with Moderna. Where does the stock go? 36. Payday. And now it's moving sideways. It's kind of boring why it's moving sideways. Doesn't matter. Already made that big money before. Have a bunch of cheap calls. I'll leave it in there. Even yesterday, Trump mentioned Moderna on his press conference. No, on his, late in the day. So that's the way you do it. Now, for fast traders, this stock can work. It's a good looking chart. Let's take a look at the channel. Upper end of the channel is $155. One day you wake up, nobody ever knows which company is going to get bought out. By the time the ones who are already said, oh, we're going to get bought out, they're the ones which don't make the money. The ones which come from nowhere and just boom, get bought out are the ones which make the most money. Do I think it is a fair shot? I think it's got a good probability it will, based on my research. But more importantly, the charts are pretty damn good. I'll just be trading it for 134, 105. That's $29. Why not trade things for 29 bucks? Be a little patient. AMD. I've been trading this stock very successfully for a while now. I wish I knew the stock when it was, I know the stock. Who doesn't know AMD? That's the rival to Intel. I never got into the stock till the 40s and 50s. And I've been trading, since the 40s. I missed this whole run last year. And now I love it. Why do I love it? Options are cheap, pays me the bills. I don't have to buy options at $6, $7, $8, $9, $10. Have any of you taken any of my alerts on AMD and made some money?
Yeah.
Yeah.
Okay, good to hear 2 years, I need to hear more years. These are the type of stocks that are not going to blow your account out unless you put everything in it. And if it works, everything in it, boom, you're up 130% the next day. Your account just more than doubled. This is a good looking chart. I like it. Great company. And in gaming, and bottom line is all the hardcore processors, the Ryzen processor and stuff, like serious stuff. So what am I looking for? Do I think the stock's going to go to 59? What the hell do I know? All I know is there's a gap, and that gap is 51, roughly 51 to 52. The best part about AMD is, this is the last thing I'll say before I shut down the session, is that the stock moves 30 cents, you're up 5%. Stock moves $1, you're up 100%. It's like amazing. It's cheap and it moves. What more could you ask for from an option? There's your gap. This gap is, look at this. So these are the ones that people can start, like it's new options traders, old options traders, I don't care. Like you could just buy some, like a new guy says, okay, maybe let me buy one call. It's going to cost me $100, or sorry, not one call, $100. What do you call a call? Yeah, one call at $1 is $100. So bottom line is you can just start small. Take incremental profits. Maybe you're up 30, 40 bucks on a very small account. Take that. That's 40 bucks that you just got given. So I like this stock. And if things really rip, then the stock is going to go up towards 57. I have seen AMD and Micron, that's another serious player, go up on days that the market's blood red. That's it. Any other quick question I can answer before I run? It's 10 o'clock.
I'm good.
Everyone's good? All right, guys. So like I said, start to focus more on my Twitter feed. That's a lot of good stuff that I put up there. It takes me a lot of time. It's for your own good, not mine. So start to focus more, start to get to know Mr. Market more, because that's how you become a great trader. Forget about a great trader. That's how you become a good trader. Okay, somebody, please, mute the microphone. Thank you. Wow, that was like a bulldozer going through my brain right now. So bottom line is, this is tough business, but it's actually easy with all the tools that I provide. And I do all the hard work of showing you like where it's going, what it's not doing. You got to learn how to manage the trades a little bit better. That's all. That comes with a little bit of time, but not too much time. But if this business just gave FU money to everybody, then why isn't everybody a successful trader? Ask yourself that. But not everybody is in clueless A trading. They don't look at the market like we do and call these shots before they happen. So remember that you're in a terrific service. All you got to do is focus a little bit more, take a little bit more risk, stop being scared of the market all the time. And the only way you get less scared is by understanding the charts. In the meantime, the market is a crazy, wild place. But there's a method to the madness. That's my job. I explain it. Hopefully you guys get it. I know most of you will make it. But don't think it's a cakewalk. This is not a picnic in the park with the family. And I say it's very straightforward. God bless you all. Let's go make some money for the rest of the week. Today is what? Wednesday. We got Thursday and Friday. Let's get ready for some volatility and sign up for the advanced coaching sessions. Those are excellent. I put out the first one for free. I'm not putting out the other ones. When people pay, I cannot disrespect them. I can't diss them by putting out what they paid for and put it out there. I just put one out to help you guys out, but no more free stuff. I give free complimentary sessions. After that, you got to pay those few bucks and sign up for these group sessions we have on the weekends, and they're going to be the best thing ever that you did. You think you can learn this thing completely on your own? Sure you can, but it's going to take you a much longer time. It's going to cost you a lot more. You know why? Because you're going to lose a lot more by doing stupid stuff. And if you take that coaching session, which takes a lot of my time, by the way, but I enjoy working with people, especially newer guys and girls, is then you lose less money. Because by the time you think you got this, you'll be broke 3 times over in your trading capital, I mean. And that's just going to mess with your brain, and it's over. In the meantime, the market always delivers money. Just got to take it the right way. God bless you all. Thank you, and good night.
Good night.